With increasing mega projects running, capital spend and risks are high. How will this impact financing requirements in the industry?
The existence of mega projects is not an issue. The industry has been financing mega projects for many, many years. The issue is more around the structure and the risk allocation. With the uncertainties that have been generated by the fall in resource prices, clearly it goes to the structuring. How much debt is needed, how much debt capacity can a project carry, given the economics nowadays? That's the key question. In terms of financing projects, 5 billion, 10 billion, that can be done relatively comfortably still. Structures, however, do need to change, and it's a project-by-project risk basis, and particularly around locational, political, and those type of risks have become rather sharper in recent years, of course.
How willing and supportive are banks of long-term investment in large-scale gas and LNG projects?
Banks remain very supportive, but it does come back to the economics and to the structure. The fact is that banking regulation has changed, so long-term capital commitments are increasingly challenging for banks. So what we're seeing is a movement towards the US structures of mini-perm. So banks are very good at taking construction risks. They're flexible, they're able to deal with delays, they're able to deal with change. But after about a 5-7 year funding period, banks are increasingly looking to a structure where the bond market will take out all or a majority of the financing.
What innovative financing models need to be adopted moving forward?
Don't think we need innovation in the financing model. What we need is a change in who finances at which stage in the process. So at the early stages of construction, the banks are very well placed to do that. However, later on, we have funds, pension funds, equity funds of all sorts of, debt funds of all sorts of sizes, who are increasingly looking for they've always looked for long-term assets, and they're looking for a yield. And long-term LNG and gas projects are perfect. Once they're stabilized, they tend to work very well. And as long as the structure is robust to economic change, so changes in prices, the right pricing structures are in place, those are good new sources of capital. So that's where we need to look, is more at getting new sources of capital more familiar with what it is we do and what the banks have been familiar with for 25, 30 years, rather than actually changing the way in which we fund projects fundamentally.
What are you most looking forward to at Gastech 2018?
We would really like to see more of an engagement between the different sources of finance and the industry. There are examples, particularly in Europe, of the equity coming from funds, the debt coming from the bond market, the sort of things I've just mentioned. And we need to expand that to a wider global presence. And at the moment, the finance industry talks to itself, and the gas industry and LNG industry talks to itself, and we need a greater level of integration. If we can achieve that at Gastech 2018, I think that would be a significant improvement and step towards a mutual understanding. And therefore, those questions that you've just asked the answers to those become well understood and common form of thinking, rather than being something that's perhaps a little sort of unknown.